Alright everyone, welcome to this short video. We're going to be looking at what happened with Bitcoin when it recently crashed at the beginning of August. As we see, we had a very nasty sell-off in the cryptocurrency, which at one point had literally tumbled in the space of a few days aggressively down nearly 25%. Okay, it was a nasty sell-off that happened, and it happened at exactly the same time as the stock markets were selling off. So what happened to cause Bitcoin to sell off so aggressively? Well, it was all down to fundamentals, okay? And this Bloomberg headline will tell you exactly what happened. This was on Friday when the US jobs data came out, and it was a jobs data that jolted the markets and it caused this panic and this sell-off, okay? So what happened was on Friday last week, okay, we had a flight out of global equities, which is the stock markets, is becoming more of a stampede as increasing signs of a US economic slowdown spurs a pivot away from risk assets, okay? And investors were buying safe haven things like gold or bonds, for an example, to get out of the stock market. So why? What happened on that Friday that caused this market sell-off? Well, it was all down to the jobs data, okay? So in the United States, the jobs data came out, and it painted a picture that the markets were worried about, okay? Because the unemployment rate is going up so fast, investors are getting worried that the US economy is tilting towards a recession. So you can see over here, the unemployment rate jumped from 4.1 to 4.3. Now, it doesn't seem like a big jump, but when you've got a population of 300 million people, 0.2% unemployment rate going up is hundreds of thousands of jobs being lost in the economy. Now, if you take that into consideration for where the unemployment rate was in January, from 3.7 to 4.3, well, then there you see the picture. That's millions of Americans losing their jobs. And why are they losing their jobs? Well, remember, after COVID, the Federal Reserve was raising interest rates very aggressively, and they took rates at the beginning from 0.25% all the way up to 5.5%, where we are today, okay? So why is that important? Well, think about it. When your mortgage payments go up, your credit card payments go up, your car loan payments go up, your student debt payments go up, your personal loan payments go up every single month. People have less money to spend. But the Fed wanted to do this because remember, in 2022, inflation was out of control. So the Fed's strategy was to raise interest rates, cause people to cut back on spending. That would bring a higher unemployment rate, because businesses will obviously let go of workers when they're not making as much because they want to save money. And what the Fed has been saying in all their publications and their press conferences, we want to see the unemployment rate go up because businesses let go of workers, and then businesses have less salaries they're paying to their employers, so it gives them room to cut prices to help inflation go down. And that's exactly what we've seen. Inflation's now come down to 3.3%. If you're looking at core inflation, headline inflation is back down to 3%. The Fed's preferred inflation measure, PCE inflation, is back down to 2.5 to 2.6. So the Fed's got inflation under control, but now the Fed is saying the jobs market is worrying them. Okay, now what you need to understand if we're trading is how much Bitcoin and stock markets are correlated. Let me show you. Since the stock markets crashed in 2022, let's look at the correlation between the stock market and Bitcoin. Can we see Bitcoin started to drop from $6,000, $7,000 in 2021? Look, as Bitcoin was coming down, look at the right hand side, the stock markets were coming down. And when the stock markets bottomed in October, so did crypto. And then when the stock markets was rising here during this period of time, look what crypto did at exactly the same time. Bitcoin was rising. And then as soon as you had a pullback here in the stock markets, you had a pullback in crypto. And as soon as the stock markets were rallying again in the S&P 500, so was crypto. And then as soon as you got a pullback in the stock markets here, so was crypto. You see, they move at exactly the same time. And then you had another leg up higher in the stock markets here, no surprise, so was Bitcoin. And then you had this recent sell-off here, so was Bitcoin. So the question is, well, what the hell is causing these two markets to move at the same time? Now, if you understand interest rates, you understand it's the most important driver in the markets, okay? So let's look at the 10-year government bond yield. Now, what you need to understand, when I spoke to you about mortgage rates, credit cards, car loans, student debt, these interest payments are pegged at a premium to the 10-year government bond. So the 10-year government bond is known as the benchmark interest rate. Okay, so look what happened. When the central bank was raising interest rates in 2022, as the 10-year government bond interest rate goes up, that means everyone's mortgages, credit cards, car loans, student debt payments are going up. So look, as the interest rate on the 10-year government bond goes from 1.7%, which you can see on the right-hand side here, as it climbs, as it really starts to march higher from this period here, Look what happens. Remember, the first rate hike is in March. Look at Bitcoin. Remember, Bitcoin and stocks move at exactly the same time. Then look, as soon as the 10-year government bond yield peaks and starts to come down this period here, no surprise, Bitcoin's going up in value. Soon as the interest rate marches higher over this period here, Bitcoin's back going down in value, okay? And then look what happens. Remember, we had that period where stocks and Bitcoin moved together? Soon as the 10-year government bond declined here, that's when you got that move higher in Bitcoin, was up 100%. And then as soon as the 10-year government bond from this period here starts to march higher here, look what happened. Bitcoin can no longer go higher. It goes down 20%. Okay? And then that big rally higher we saw in stocks and crypto was because here, look, the 10-year government bond has now been declining during that period of time. Okay, look, you saw the big sell-off here in the 10-year government bond. Bitcoin jumps up aggressively with stock markets. All right? And then stock markets and crypto have been moving at the same time. Okay, so why is that important for you to understand? Well, if you can understand that every time the 10-year government bond is going up, it means interest payments are going up. So every time you see this big rally here in the 10-year government bond, the reason Bitcoin is dropping during this period of time because it's squeezing consumer spending. So there's less money going into crypto, less money going into stocks. And then when you see the 10-year government bonds declining here, the reason you get a jump up in Bitcoin, because everyone's interest payments are going lower. So what do people have more money to spend, to invest? Where? Stocks, crypto. And the company earnings of businesses in the S&P 500, for example, are going to be getting stronger when people have more money to spend. So now you're seeing the relationship between crypto and stocks. And it's all driven by interest rates. And the reason why the markets panicked the other day and you saw a sell-off was because when the unemployment data came out, the markets thought, shit, the US economy is not as strong as we expected. Remember, look at that bigger market view, a bird's eye view. Stocks were just sitting at record highs recently. So what this is called is a correction. When the markets drop by around 10%, it's called a market correction. So what is a correction? When investors realize that profits in businesses may not be as good as they previously expected, so they take profits. This is a profit-taking scenario where investors are locking in profits that they've built for the years. Okay, remember, hedge funds and all these big funds, they need to lock in their profits before year's end to show their performance and try to market more investors coming in. Okay, so this is profit taking. However, look at this headline today: hedge funds pile back into crypto, call options after horrific liquidations. See, the hedge funds are back in. Why? Because they understand it's just a correction. Okay. This is a correction. This is a correction in price, which means this is your buying opportunity. All year, I've been buying Bitcoin with my members off this level, okay? All year. And we've been catching really good moves, okay? So what you need to understand is, well, if it's the 10-year government bond yield, the interest rate on 10-year government bond driving crypto, well, then how do we know where the 10-year government bond yield is going? This is called the spreadsheet is where we understand where interest rates are going. So we have the Federal Reserve, we have the Reserve Bank of Australia, the ECB, the Bank of England. You need to be able to look and see where the interest rates are going, because when you have predictions where we're betting on fast rate cuts because the markets are panicking what the Fed is doing to the economy with the unemployment rate, the markets are betting on a lot of rate cuts by the Federal Reserve. So as the central bank's interest rate goes down, the 10-year government bond goes down. And what happens when the 10-year government bond goes down? Crypto and stocks go up because more people have money to spend and money can go back into assets. So this liquidation here, this sell-off here is your buying opportunity, because now you understand that as the 10-year government bond declines, as I've been showing you throughout 2022 up to 2024, okay? Whenever the bond yields over here, for an example, whenever you get the decline in the bond yields like here, that's when crypto will keep jumping up, okay? When you get declines here, that's when crypto jumps up 100%. When you get declines from here, look, that's when crypto takes off. So the bond market is always being driven, so the 10-year government bond interest rate is always being driven by the market's expectations for interest rates. And right now we're betting on cuts. So as long as this 10-year government bond keeps falling, crypto keeps rising. So that's where you buy. So guys, if you would like to know where interest rates are going, I have something for you. Okay, I have this channel where we're updating members on the interest rate expectations every single day so you can see where interest rates are going. And I've got a big community of people where I'm educating them on where the markets are moving fundamentally based on the macroeconomics behind the market moves. And then you can follow the trades that we're taking as well. And you can understand exactly what's going on. Just this week, look at the members' results following my trades in the currency markets. £1,000 for this member, £2,700 for this member. Shane made himself $230 profit. This member made 500. Samuel made 2,300. This member made 2,000 following my trades. This member made 300, 1,000. Come and get involved, okay? You'll get market updates from me, education. You're gonna get signals from me to follow the trades, understanding fundamentals, and you're gonna get the interest rate expectations, which is vital for you to trade Bitcoin successfully. So, hope that makes sense, guys. Come and join. Click the link below this video. You'll get instant access. All right, and I'll see you in the channels.